This self-learning video is created by Jagrat Creations. I want to take care of one illustration for a chapter of liquidation of companies in corporate accounting. The sum that I intend to solve here before you, I just present it before you. Observe it. This is the sum that I intend to solve here before you. Prepare Liquidator's final statement of receipts and payment. So we are required to prepare Liquidator's final statement of receipts and payment. Now liquidation. Let me say you a theoretical aspect in brief. Liquidation or winding up is a legal procedure by which the existence of a company is being brought to an end. To bring an end of the existence of a company, liquidator is appointed to administer the affairs of the company in course of liquidation. This liquidator is appointed either by shareholders members or is appointed by tribunal. The liquidator who is so appointed, his function is to collect, assume and realize all assets of the company. So all assets of the company should be collected and realized, means converted into cash. After doing that, he is supposed to make payments in a manner prescribed in company law, wherein creditors' interests are protected. So after collecting and realizing cash or sales proceeds of the assets, he has to make payments to all the claimants of the company in a sequence prescribed under company law. What is that sequence? First payment is to be made to fully secured creditors. Then next, liquidators' remuneration and expenses. Third, preferential creditors. Fourth, debenture holders or any other creditors who has a floating charge over the assets. Then you have to pay unsecured creditors. After that, payment is to be made to preferential shareholders for their preferred rights. And ultimately, whatever the cash balance is left, that is to be distributed among shareholders. This is the process in which liquidator's final statement of receipts and payment is to be prepared. I read the sum. Janta Limited went into voluntary liquidation on 31st of March 2017. Balance sheet on that date was as under. On the asset side, you are given goodwill, land and building, machinery, investment, stock, debtors, cash balance, profit and loss account for like 37,000. Share capital, 1,000 A equity share, 100 is fully paid up. 15,000 B equity share, 50 share of rupees 50 is 40 per share up. 40 per share paid up means 80% of the face value is paid. 2,000 C type of equity shares, 10 is 6 per share paid up. So in case of this third category, C category, 60% of the face value is paid. In the first, 100% of the face value is paid. In the second, 80% of the face value is paid. In the third, 60% of the face value is paid. And in the D category, against share of 4 rupees are paid up, so 80% shares are paid up. So A category 100% paid up, B category 80% paid up, because 40 against 50 is 80%. Third category 60% paid up, and last category 80% paid up. Here the face value of all the category of shares are different, so we are required to understand the percentage of face value paid by each shareholder. That's an important understanding. 2,508% preference shares, each of rupees 10 is fully paid up. 10% debentures, creditors, provident fund. Provident fund is a preferential liability. Preferential creditor means, as per law, they are granted a preference for payment as against unsecured creditors. So we are going to study what are the preferential creditors, what are the provisions of company law for preferential creditors in my subsequent videos. At present, I say that provident fund is a liability prescribed under company law as a preferential payment. Preferential payment means liquidator is supposed to pay this provident fund in priority to the unsecured creditors. Outstanding income tax 1617. The date of liquidation, voluntary liquidation starts from 31st of March 2017. So 1617 income tax liability that has arisen within 1 month, within 1 year, within one year before the commencement of liquidation. So 1617 income tax liability will be identified as preferential liability, while 1516 liability, that liability has arisen 1 year prior than 1 year to the commencement of the liquidation. So this 1000 will be treated as an unsecured liability. Liquidator realized the assets as under land and building, stock, investment, machinery, debtors. Goodwill is not realizable. The expenses of liquidation amounted to 630 and liquidator's remuneration is 4% of the amount realized and 3% of the payment to unsecured creditors. Payment to unsecured creditors, notice, debenture interest was paid up to the date on 31st of March 2017. Preference dividend were in arrears for the last 1 year only. All payments were completed, were given on 30th September 2017. Prepare liquidator's final statement of receipts and payment. On the basis of this, I am required to solve the sum. Now see. I am required to prepare liquidator's final statement of receipts and payment. It is alike to cash book or bank book. It is bifurcated into two sides. One side is known as receipt side, second side is known as payment side, but it is a statement. Remember it is not an account. So liquidator's final receipts and payment. First of all, I will write the opening cash and bank balance, 5000. Then assets realized, land and building, machinery, stock, debtors, investment. These are the assets realized. Now here you are given the details of creditors' provident fund, but no creditor is holding any charge over the assets, so there are no fully secured creditors. So payment to fully secured creditors will be nil because there are no fully secured creditors. After considering the details about the fully secured creditors, we should proceed with payment to liquidator's remuneration and liquidation expenses. So liquidation expenses are 630. Liquidator's remuneration 4% of the amount realized for assets. So 97,250 into 4%, that is the remuneration to be paid. Over and above, he is entitled to have a remuneration or 3% of the payment to the unsecured creditors. So 3% of unsecured creditors, the payment will be made. Yet I have not paid unsecured creditors, so no remuneration can be paid to liquidator. The moment I will pay the unsecured creditors, I will record remuneration payable to the liquidator. After this 3% gets, so 3%, you have to keep a filler for that. Now next payment is to be made to preferential creditors, and then you have to pay the unsecured creditors. So preferential creditors, as I told you, provident fund has to be paid in priority as against unsecured creditors. So preferential creditors includes provident fund liability. Similarly, outstanding income tax within 1 year before the commencement of liquidation is a preferential liability. So this 1617 income tax liability 2000 is considered to be preferential. So 12,000 is preferential. So preferential creditors are to be paid in priority to these unsecured creditors. These creditors of 15,000 are unsecured creditors. And this income tax liability 1,000 is also unsecured creditors. So total unsecured creditors is 16,000, preferential creditors are 12,000. Now I am required to pay preferential creditors in priority to unsecured creditors. Means first payment is to be made to preferential creditors, then you can make a payment to the unsecured creditors. Now unsecured creditors are to be paid after preferential creditors. But remember, unsecured creditors are holding no security over the assets of the company, while these debenture holders are generally holding a floating charge over all the securities, over all the assets of the company. So debentures are to be paid in priority to the unsecured creditors because debenture holders hold a floating charge over the assets of the company. So we are required to pay after preferential creditors, we are required to pay debenture holders. So debentures face value. Now 10% debentures, interest was already paid up to 31st of March 2017, but all the payments were made on 30th September. So should I pay 6 months interest to these debentures or not? That is to be decided on the basis of that. Do I have sufficient funds to pay all unsecured creditors? And after that, any balance, cash balance is left with me, which is available to preference shareholders and equity shareholders? If the answer to this question is yes, then and then you can pay interest to debenture holders for 6 months, that is up to 30th September 2017. So let me find out the cash balance available with me. This is the total receipts. So far 1, 2, 3, 4 payments are made. Its total works out to be 41,520. Cash balance with me is 60,730. Now these funds are sufficient to pay this unsecured creditor 16,000. Answer is yes. If the answer is yes, then I can pay debenture holders the additional interest for 6 months. So 16,000, I have got available funds from which I can make a payment to unsecured creditors. The moment I pay unsecured creditors, I am required to pay liquidator remuneration. So liquidator remuneration at the rate of 3% on that is to be paid. So this is the total liquidator remuneration. Now this payment, this 41,520 is a number payment arrived at without considering the 16,480. So what I do, 16,480, the next payment made will be added to this 41,520. So now my total payment works out to be 58,000, and now my cash balance available is 44,250. Now 44,250 is a balance available after making payment to unsecured creditors and the remuneration to a liquidator thereon. So this is the balance available. If this balance is sufficient for payment of additional debenture interest up to 30th September 2017, I should pay debenture interest. Let me work out 6 months debenture interest. So 1250, I can comfortably pay 1,250 out of this cash balance available 44,250. So this is the interest that I can pay now. So total payment made to debenture holders 26,250. After making payment to debenture holders and unsecured creditors, I should pay preference shareholders if at all they are there. So preference share capital 25,000. Preference dividend were in arrears for last 1 year. So from this available funds I should pay preference share capital with dividend, arrears of dividend. So 25,000 into 8%, 2,000 is the preference share dividend unpaid. So total amount to which preference shareholders are entitled is 25,000 plus 2,000, 27,000 that I can pay comfortably from the balance available. Now, how much is the balance available for equity shareholders? Now, what are the additional payments made by me, which I need to add in this 58,000? Those payments are 1,250 and 27,000. So, 1,250 and 27,000 is the additional payment made. So, 58,000 plus 1,250 and 27,000. So, my now total payments works out to be 86,250. and the cash balance available to me is 16,000. This much cash balance is available to me for payment to equity shareholders. As you know that A type of equity shareholders are 100% face value is being paid thereon. B type 80% is paid. C type 60% is paid. D type 80% is paid. Now, out of these funds available 16,000, I should pay first of all A type of equity shareholders 20% to make them at par with B and D. So 1,000 shares of rupees 100 is fully paid up. 20% of 100, 20 rupees. So on 1,000, I am required to pay at the rate of 20 rupees, 20,000 from the available funds. That is not there. I should make payment to these equity shareholders in such a manner, or I should demand from these equity shareholders last call in such a manner that my distribution of this 16,000 is equitable and is on just and equitable ground, or the sufferings of all the equity shareholders is at par, proportionately same, pari passu. Now for the purpose of finding out the amount to be realized as last call from some categories of the shareholders and the amount to be refunded to some category of shareholders, I just prepare one working note that is known as memoranda cash account. In this memoranda cash account, I write down the cash balance 16,000. This is memoranda cash account. In this memoranda cash account, I will demand the last call, the entire last call on all the categories of the shareholders. Then I will find the available cash balance with me. Now from that cash balance, how much refund I can give to these shareholders per 1 rupee of share capital paid by them. Subscribe 1 rupee of share capital. So let me demand first of all last call on all the types of these equity shares. This A type of equity shares are fully paid up. So I cannot demand anything from them. They are fully paid up. I cannot demand any last call. On this 15,000 shares, I can demand 10 rupees. So now after demanding 10, they will become fully paid up. So 100% paid up they will be. They will be 100% paid up. Against 50, they have already paid 40. Now they are paying me 10. So they are now fully paid up. Actually, in practical life, liquidator don't receive all these things. It is a notional receipt. It is an imaginary receipt just to find out the equitable distribution of this 16,000 amongst various categories of equity shareholders. From C, 2,000 shares, 4 rupees are demanded. From D, 5 rupees share, 4 is paid, 1 rupee is demanded. So this is how, if I demand last call on all the shares, then all these shares will be 100% fully paid up. And by making that, I will have a cash balance of 41,500. Now let me find out the total share capital. Total paid up value of share capital, including this notional last call is being demanded. So now I work out that notional capital, 1,000 share of 100 is fully paid up. Why fully paid up? It is already given fully paid up. This 15,000 shares into 50, they are fully paid up 100%. Why? They have already paid 60. And notionally I have demanded 15,000. So 60 plus last call already demanded and assumed to have been received. So 60 plus 15, 75,000. 2,000 shares, 10 each, 20,000 if they are fully paid up. They have already paid 12,000. The notional, assume, imaginary, last call, presumed to have been paid 8,000. So 12,000 plus 8,000, 20,000. And 25,000 into 5. So they have already paid rupees 4 and 1 rupee is demanded. Now they are fully paid up. So total capital is 2,07,500. Now this total capital 2,07,500, they are entitled to have 41,500 proportionately, equitably, pari passu. So let me find out the refund per rupee of capital. So 41,500 divided by 2 lakh. 7,500, 15 5s are 75, 4 5s are 20, so 1/5. So it works out to be 20 paisa per rupee of share capital. So I am required to return 20% of the face value. Or per rupee, I am required to refund out of funds available 20 paisa per rupee. So let me find out the refund per share. On 100 shares, face value 100, per rupee 20 naya paisa is to be paid. How much redemption should be made on 100 rupees? So 20 rupees. Similarly, face value 50 into 0.20, 10. Similarly, 10 into 20%, 2 rupees. And 5 into 20%, 1 rupee. This is the refund should be made. So, if I go for refund, 1,000 shares at 20, so 20,000 is to be paid. Now 1,500 into 10, 15,000 is to be paid. 2,000 into 2, 4,000 rupees is to be paid. And 2,500 into 1, this is to be paid. This is a notional refund. Notional refund means imaginary refund. If they have paid all these last calls, all the categories of shareholders are entitled to have this much of refund. So A type, they are required to pay notional last call 0 and notional refund to them 20,000. So real refund of 20,000 is to be made. B category, notional demand from them is 15,000. Notional repayment is also 15,000. So in actuality, in actual liquidator statement, nothing should be demanded and nothing should be paid to the B category. C type of the notional demand from them is 8,000, notional refund 4,000. So notional demand 8,000, notional refund 4,000. So real demand has to be made 8,000 minus 4,000, 4,000 has to be received. And for this D category, 2,500 notionally demanded and notionally paid. This is memoranda cash book. 2,500 is demanded and 2,500 rupees are paid. So nothing is to be demanded and paid. On the basis of this memoranda cash book, you should decide that we are required to pay 20,000 to A category. Nothing is to be demanded and paid to B category. But you are required to demand from C category 8,000 minus 4,000. So you are required to receive 4,000 from C category. And from D category, you are not required to demand or you are not required to pay anything to them. On the basis of this, pari passu distribution occurs. So everybody suffers 80% of the face value, 80% of their promise to pay to the company by way of share capital. To the extent of 80%, every category A, B, C, D, all the categories are suffering 80% of the face value in the process of liquidation. So this is how, if you make a total of receipts, it will be 1,06,250. Similarly, if you will make a payment here also, it will be 1,06,250. This is how I have gone for equitable distribution of cash available for shareholders in a manner that neither loss nor gain occurs to any category of equity shareholders. So in this sum, I have tried to explain you how the liquidator's final statement of accounts could be prepared by taking one sum, explaining the theory aspect as much as I can. I'm going to upload few more videos on this issue so that you will understand it better. I feel that you have followed all these things. Thanks to all.